Hello, and welcome to this video on trading the S&P or scalping the S&P using order flow. So why is this important? Why did I decide to do this video? Because order flow trading, understanding what buyers and sellers are doing at every support and resistance level, every supply and demand zone, is an invaluable tool. And of course, I've spoken about it before. In fact, I've done an order flow series. Hopefully you've watched that. But in this particular video, we're going to look at how you can use the DOM, which is the depth of market, to identify high probability trading opportunities at supply and demand zones or support and resistance levels. Okay, now in this first example, I'm going to show you, you're not going to see a trade, but what you are going to see is order flow. You're going to see accumulation down here. So I want you to look at how the contracts are being absorbed by the buyers and the sellers. Remember, if you see my previous video, you'll understand exactly what's taking place here. The only difference is that this is a different ladder. This ladder, or this depth of market, is produced by QuantSpark. It's called the Super DOM series, a phenomenal tool, and has advantage over Jigsaw Trader in that there are no monthly fees. So there's a link for this in the description. But let's just play the video now and have a look at the way the market's trading. So this is our level here. This is a volume profile level drawn from a composite volume profile over a few days, and it's taken from a high volume node. All right, so let me just click play on this and you can have a look. So notice the market's come down here, and we're gonna see absorption taking place between the buyers and sellers. 212, 215, 354. So you can see there's definitely a battle taking place. The only question occurs here is, the only question to ask is who's going to win the battle. 419. Okay, so that's what you want to see at your level. So we know this is definitely a level. I'm just going to recenter the chart in the middle, but pay attention to the 336250 level. So I'm recentering it now. Okay, all right, and now you see the market begins to trade up. So that's how you can use that's how you can use the order flow to identify and confirm that you have a solid level that buyers and sellers respect. In a minute, I'm going to show you this. I'm going to show you some live trades. I'm going to show you it during the US market and also the European market. So we're talking the pre-market trading hours where there's less volume, the market's slower. Let me just pause this now. All right, cool. So in this occasion, you're going to see a real trade taking place. I want you to observe, I've gone a little bit too far. Let me just rewind it back a little bit. Okay, from here, because I've chopped up my various different trades. So let's take it from here now. You can see the market sold off into this level here. We have a bit of a ledge, right? This is a 2-minute chart on the S&P, but it's a support level nonetheless. So the market is traded down, and now we can see two-way trade taking place. Absorption from the buyers and the sellers, taking down below here. Look at that, backwards and forward, but the sellers can't push it lower. Now they rally up. I've missed the opportunity, but I'm gonna get in here because, let me pause. The reason I got in here is because 230 contracts began to accumulate on the bid side. So buyers wanted to be long. Okay, obviously we've touched the level. We can see a bit of a hammer forming, and let's see what happens next. And away it goes. Very volatile. The market moves aggressively, and now when it slows down, that's when I think about getting out. Okay, so we're starting to see a bit of absorption up here, and I get out. So that's an example of the power of order flow trading on the ladder. Obviously this is the US Open session. As I said, I will show you one during the slower European session shortly. Okay, and here it is. All right, so pay attention to what's happening now. We're currently here. The market is going to trade up to this support level. It's going to be a resistance now, but it's a previous support. Okay, and I want you to notice that when the price gets there, how it stalls and how we have backwards trade, back and forward trade. Okay, so look at it here. We get trade. We've got 1934, 22. Market is bouncing up and down between 43 and 43.25. 41 trading, but you can see it doesn't want to go above it. That tells me that they're respecting the level. I get in, it's a quick scalp again. It's the morning hours, small size, and we can see the market respected the level that was given extra potency by the order flow pattern that we just saw. And these are patterns. You can see patterns on the order flow. All right, and last, this might not be the last one actually, but here's a highly volatile example for you. So the market has been rallying fiercely up. Now we're coming to this level. This level is another composite high volume node from a composite volume profile. And this is what gave me the confidence to actually pay attention to this level. But let's see what happens when the market gets there. It's currently there at the moment. Okay, seems like I've gotten too far before we can see exactly how it's trading. So let's just go back a bit. Here we go. Let's play it from here. All right, so you can see we've got two-way trade, 643. They've traded through. They begin to accumulate on both sides. So buyers and sellers are both accumulate, but eventually stops a hit and the market breaks out. And I believe I've got one more example for you, and then we're done. Okay, this is the last one. This is where the market has slowed down a little bit. So UK time this is. So we're just after 4 o'clock. You can see 111 contracts are now accumulating on the bid. We have this level here. Bit of a support, short term, very short term support level here. Supply and demand zone, bit of a ledge on the volume profile, and then we get 111 trading through. We've also got 181 contracts here on the bid. So I get long. Well, I put an order to get long. Doesn't get filled instantly, but the market trades. But you can see 227 accumulating. These are strong buyers. All right, so I'm in the trade now. Of course, I need to put my stop in. And where to get out. Again, for a scalp like this, we're looking for an area where we have support or resistance, and that's the lower the wick. So that's where I've placed my exit, and then we'll just wait to see what happens. And there you go, we're out of the trade. All right, so what's important here to remember is that using order flow or any trading technique is not guaranteed to give you success on every opportunity. So there'll still be losses, but what's important here is that this is a high probability setup. So when you combine this with supply and demand zone, support and resistance, you've now increased your edge to a different level, and you'll be looking at what professional traders are looking at. So I hope that helped. I hope it was valuable, and I'll see you on the other side. Ciao.